Okay, so I was going to base this video on Fibonacci tool, how to plot, how to utilize the Fibonacci tool, how to plot it onto the chart, what the levels can correspond to, how you can sort of implement them in trading. I'm not going to delve too deeply into that because I have covered that in the previous video, and also hopefully lead on to what you need to start to look for in terms of looking for harmonic and advanced patterns. So obviously the conventional harmonic and advanced patterns use the Fibonacci retracement levels. The Fibonacci retracement levels determine each point within these harmonic and advanced patterns. So in order to sort of manually look for these patterns, they're quite difficult to see with the naked eye. There's certain things you need to look for, and then you can apply the Fibonacci levels to these things and then build your patterns from that point, so long as each point hits the requirements of that pattern. So just to get started then, we're just on the euro dollar chart, 1 hour chart. Again, it doesn't matter, it can be on the daily, hourly, minute chart. The Fibonacci tool does exactly the same thing on all time frames, on all charts. So I'm just using TradingView here. I will start with the Fib retracement tool. This again can be done on MetaTrader. I'm just doing it on TradingView at the moment. I'll show you on MetaTrader in a minute. So the Fibonacci tool, then you want to stretch it from your start point to your end point. So for this example, I'm going to start from this swing low here. By swing low, I just mean a significant low. So a swing to the downside. I would say this is a swing to the downside, and the low of that swing is the swing low here. Up to the swing high, and again this is the swing to the upside, and the high of that is here. So swing low to swing high. Again, it's subjective what you define a swing as. There's no technical definition of it. It's just a significant move to the upside or downside is a swing high or a swing low. This here could be your swing low, and this here could be your swing high. But for this example, I'm starting from this swing low here to this swing high up here. That's how you want to draw your fib tool on. We can use this magnet tool here, and it will snap it to the low, and snap it. You see it following the highs there. Snap it to the high. So we don't have to worry about getting them exact. That will use that. So from the low to the high, and it's important you do that not from the bodies of the candles unless you've specifically back tested it, but that's a bit of a strange way to do it. It's from the extremes, so the low of this candle to the high of this candle. Here you can see I'm not using the conventional Fibonacci levels. I'm using percentage increments. 10%, 20%, 30%, 40%, 50%. This is a Fibonacci retracement. Let me go in just so I can show you what you'll be seeing when you first apply this tool. 8, 6, and 1, 0. Okay, so this is what you'll see. You'll see the first Fibonacci level 0.382, second is 50%, the third is 618, 786, 886, and then 100%. So what do these mean? I personally like to think of them as percentage retracements, which is why I had 10%, 20%, 30%, nice round numbers. But these are technical Fibonacci levels, but all this means, this 382, is you've gone from 100%, or your start point, to your finish point. This move is, draw this on, where is it gone? Where's range? So this move up here, 325 pips. So this is a 325 pip move from your swing low to your swing high. So this 382 retracement level, This is 38.2% of 325. So what's that? 325 times 124 pips. We can test that. Sorry, that's going the wrong way. $124 pips. See? 38.2% retracement of this entire move is all that 382 stands for. It's just someone somewhere has come up with this magic number 382. Again, in my previous video on the Fibonacci levels I've covered these, but there's a load of mathematical basis behind all of these levels. But basically it's a 38.2% retracement of this entire price swing. And 0.5, pretty self-explanatory, it's a 50% retracement of this entire move to the upside here. So 50% of 325, 162, it should be 162.5. 162.5 is 50% of 325. Yeah? 618 again, 61.8%, 78.6%, 88.6%. But these are all, again, in that previous video, I'll go through and show you how these have been calculated. For the purpose of this, it's not important. This is how you would draw your Fibonacci retracement level on. So what do these levels mean? These levels you're looking at for areas of interest to begin to look for price action or a reaction at this level. So if price comes into the 382 level, you're expecting some sort of reaction. Again, with the 50%, 618, 786, 886, and 100%, you're expecting price to react in some way or another at this level. Now these levels aren't exact. Granted, they're obviously worked out to an exact figure, but they should be used as a sort of an area to begin to look for price to start reacting in the zone of this 382. So it's not going to hit this 382 level and immediately bounce off. It's going to react. So let's just take this for example. It's going to start reacting at this level like it has here. It's exceeded it, it's bounced off of it, come back down into it, bounced off, come back down into it, bounced off. Granted, this has happened in the past, so it isn't actually the 382 of this swing, it's just happened in the past. But this is what price action tends to start to do at these levels. Hope that makes sense. So that's what you're going to do. You're not going to use these levels, you're not going to set orders up at these levels or anything like that. I mean, you can if it works and you've back tested it. If, for example, after let's just say a 300 to 350 pip move to the upside, you could say 60% of the time price retraces back to the 50% and bounces another, I don't know, 30 pips. So that could be your strategy. So at 50% level, after a 300 to 350 pip move to the upside, you just set an order up at 50%, a buy limit order at 50% with a 50 pip, let's just say 50 pip profit target and a 20 pip stop loss, and 60% of the time it bounces at that 50% level. So you could use it to set orders up if that works for you. But in theory, these levels aren't precise, they're just regions where you see price start to behave differently. So you should draw your fib tool on, wait for price to come back into these levels, and then wait for price to react and give you a reason to act on that. Whether it's a buy opportunity, a sell opportunity, whatever it may be, price might break below it and use the 382 as resistance. You know, might take a sell position off of that. Again, it's your choice. But that's how you draw the fib tool on. I might show you one from the past. So if we draw it from this swing low again up to this, let's do it the other way around actually. So we can draw it from this swing high again, always start in chronological order. So from the past, working up into the present day, or whatever. So you start from further back in time and work forward in time. So start, finish. And your finish will always be 0%, because we're looking at a percentage retracement rather than if it was the other way around. This wouldn't be a 0% retracement. It's obviously a 100% retracement of this move. That's why things are backwards. 0 to 100% is this way, rather than what you would initially think is 0 starting point to 100% here. We're looking for a reaction of this price swing. So the reaction is measured in reverse, so 0 to 100%. Yeah? So always start, like I say, drag the tool in chronological order. So here again, we've gone from a swing high to a swing low, so the fib tool's the other way around this time. We've come up, we've broken through the 382. Like I said, these aren't always exact, they're not always reacted to, so it's clearly just broken straight through here, completely ignored all of these levels here. You could drop down to a lower time frame and potentially say that it's moved back down into this 618 level and reacted off of the 618 level and moved back higher. And then you can say again here, it's reacted at the 886 quite nicely and pushed down into that 618 level and used that as support. Again, like I said, it's not exact, which is why I now personally, I've always, sort of traded harmonic and advanced patterns which utilize this, but I now trade my own custom patterns which aren't based on Fibonacci levels, they're based on percentage retracements. Like I said, the 10, 20, 30, 40, 50, 60, all the way up to 100%. I just break it down into 10% increments and use them as 10% chunks as well. I don't say, right, at the 10% level price reacts. I say, okay, from say 10% to 30% price reacts within that zone, therefore I'll wait for price to go with between 10% and 30%. If price reacts, say 70% of the time price reacts, or let's just say for example 25% of the time price reacts between 10% and 30%, usually nothing happens between 30 and 50. The other 75% of the time price reacts between 50 and 60%, and then between 60 to 100% nothing happens. That's what I base mine off of, not these, just because someone says this is a magic level, you shouldn't take their word for granted. You need to test it yourself. Hope that makes sense. So, like I said, this is just that this Fibonacci tool in reverse now, so from a swing high to a swing low rather than the other way around. So if we drop back up to the hourly chart, there's also the fib extension tool. It said there's a trend-based fib extension, and that's because the fib levels are inputted, or you visualize the fib levels in the direction of the trend now. So rather than waiting for that reversal, so if we would swing low to swing high, the previous fib tools were 382, 50%, 618, in the opposite direction. This is now in the direction of trend, so we're projecting it above this high, so in the direction of the trend. So we can go from the swing low to swing high, and then back down to the swing low. There. And let's do, this is what you'll probably see. Where is it? 1272, that 618, 3. Pretty sure that's all of them. Yeah. So these are the levels you're likely going to see. Anything further than this becomes a bit pointless. I mean, you could obviously have the 2.0. That's obviously just 200%. So it's an equal move from here to here. 200% is just an equal move, so an equal distance from here to here is 325 pips. So 2 or 200% is just going to be 325 pips from here up to here. let's put that on actually, 1 and 2. So from here to here is the exact same number of pips as from here to here. Okay, so again, this is extended into the direction of the trend. So again, keeping it simple, 1.13 is 113% of this move. So it's 13% of 325. 325 times 1, 36725. Let's measure. 367.5, it won't go down to the 225. 367.5. So 367.25, that's 113%, or plus from here to here. So this distance is 13% of this entire move. Yeah? Relatively straightforward. So what's the purpose of this? For, say, a reversal. So in the opposite direction, so let's just put the fib retracement tool back on. So at this point here, we might be looking to enter a short position, so we're looking for a reversal against the trend. So if we're looking for a reversal against the trend, we might use these for targets. Yeah. So we're expecting price to come down into these levels. Where is it? Turn the magnet off. We're expecting price to come down into these levels. We might have one target here, there might be a bounce, and then have our second target, say down here at 618. So these are going to be our targets. So we obviously need a stop loss, and this could be, let's just say 1272. So this could be our stop loss here. So if price continues, instead of reversing, if price continues to the upside, we get stopped out here at a 1272. In theory, it's just, again, the levels aren't too important here. It's just having that numerical definitive sort of, I don't know how to explain it, but a definitive area or a definitive price to have your stop loss and profit targets. Otherwise they're just subjective, you'll move them around, this, that, the other. I mean, you could have it based on this support level here, so you could have, you'd have to have a specific price to put your target or your stop loss. So that might be the high here, whatever this high is, 1.10373. That could be a definitive reason. This is just another reason for having your profit target here. It's just a definitive numerical reason for having your profit targets, or an area to put your profit targets in. Hope that makes sense. Again, you can correlate it with this, so the 50% level correlates with this previous resistance here, which is then broken through here. So this resistance correlates with the 50%, so you might choose to have your profit targets here. And again, this 50% just represents a certain specific price that you can put your profit target at. 1.10329. Done. And then here, 1272, this is just, again, a specific price where you can put your stop loss. If you're expecting a reversal here, put your stop loss at this level, and it's just, like I said, that numerical reasoning behind that. And you could go back through and again correlate it with support, resistance, whatever. I hope that makes sense. So those are the two Fibonacci tools, fib retracement and fib extension, and that's generally what they're used for. So the fib extension tool, or the trend following fib tool, trend based. This is generally used for stop losses in a reversing, if you're looking for a reversal. If you're looking for a continuation, you can use it as profit targets. The retracement tool is generally used for profit targets if you're looking for a reversal, or if you're looking at a continuation, you can use this as stop loss levels, so vice versa. And again, this isn't, it's subjective where you use or drag these tools to. So I've just used that example from the swing low here to the swing high here. I will show you an example in a minute to define what you're going to include. So from here up to here, we're obviously completely ignoring this little retracement, this little retracement, this retracement, all of these little retracements where price action is just sort of consolidating and moving around or reversing. We've ignored all of that. We're just classing this from the swing low here to the swing high, we're classing this as one move. Whereas we could class them as lots of individual moves. So this could be a swing high, a swing low, a swing high, a swing low, swing high, swing low, swing high. But again, this time we're ignoring this, so we could include that. Swing low, high, low, high, low, high. So you would stretch your fib tool to correlate with these levels. So that would be your first one. Your next one you then stretch here, and the next one here, and the next one here. You see that correlates quite nicely with the 382. But again, this is subjective, how you choose to draw your fib levels on. I'm just showing you how to actually draw them on, but where you draw them to and from, that's up to you to decide. Now let me show you this in MetaTrader. So this is my MetaTrader, again same chart, euro dollar, 1 hour. Now this time, again showing you the fib tool stretched from this point in time, this low to this high. Previously, this is what it looks like here. So the fib tool is at the top here in MetaTrader. I'm pretty sure it's going to draw it yellow. Gross. Oh no, black. There to there. We've got our standard levels on. Press OK. MetaTrader automatically snaps. You get it close enough, it automatically snaps to the high, and again automatically snaps to the low. So again, we've got our levels on 23.6. That's not a key level, so we can ignore that for now. 382, 50%, 618. So we're missing our 786 and our 886. But you can add them in here. Like this. Add 0.86. And let's added that in here. So yeah, again, same principle applies. Drag it from the low to the high, and that could be anywhere. That could be this low to this high, to this high, this high. Obviously, depending on where you change it to, these levels are going to change, because this, for example, 23.6 is 23.6% of this move. So say this is a 100 pip move. If you now move it up to here, this is now 125 pips. So 23.6% of the original 100 is now, that was obviously 23.6 pips of 100, is 23.6% of 100 pips is 23.6 pips. So you've now moved it up to 125 pips. Now my maths isn't this good, but 23.6% of 125 pips is 25% more than it was before. So the distance from here to here is now greater than when it was down here, here to here. So these levels move depending on where you drag them to. Yeah. So that is them in MetaTrader. Now I can show you how to objectively define these swings. So instead of just saying, okay, I'm going to drag the fib tool from this swing low to this swing high, you want to have an objective reason for doing that. And this is where the OT zigzag comes into play. Let's just leave it at these default settings, 10 and 1000 bars back. is here. So it draws these swings on for you. So now you know you can't just ignore all of these little dips here. You can ignore this one, but you can't ignore this one. You can ignore this retracement here, but you can't ignore this one. Yeah, it's a quantitative reason for inputting these swings. So it quantifies the swings basically. So you know this is now a swing low to a swing high to a swing low to a swing high, whereas before we were just subjectively eyeballing it basically. We were just choosing whatever we prefer, which isn't good because you can sort of, especially in live trading, you can just make up trades from the middle of nowhere because you think, right, I'll eyeball this, yeah, I can sort of squeeze the swing low to swing high in here, and I won't use this time. I won't use this as a retracement, but next time I will, just in case. You need quantitative reasons every single time you enter a trade. So that is how I determine my where I'm going to swing, where I'm going to drag my fib tool from, using this the OT zigzag. Relatively simple, straightforward. I'm pretty sure I've covered this and what this indicator does in previous videos, so I'm not going to run through that now. The next thing I said I'd touch on is how to look. There's certain things you should look for in order to print these harmonic and advanced patterns on. Like I said before, they're difficult to eyeball. So in here, where are you gonna find a harmonic or advanced pattern in here? Where do you begin to look? So the first thing I'd say, if you are just starting with a blank chart and you've got no access to any software, no indicators, no nothing, just look for M and W formations. So this is where price is doing this. And M and a W. Just look for these formations within the price chart. So here we've got let's not use that one actually because the high is better. Let's find a decent one. Here's a W formation. There's a W. Here's an M. And again, this isn't taking into account those swings again, so it could be completely wrong. So like here, we could have this. Yeah, you can get creative with them. Quite a nice one here, so we could have, say from here, W. So these are the sorts of formations you're going to be looking for. So that's just eyeballing it and sort of getting the area that you want to go in and work out what's actually happening. So let's take this W here, this from this high here, 1, 2, 3, 4. That's forming our W. So we've looked, we can see we've got a W formation in here. Now we need to apply our fib tool. So starting from the tip of our W, the first part of our W, from the swing high to the swing low. And where does our retracement come to? So it comes between the 618 and the 786. So once we've determined that it comes to the 618, between the 618 and the 786 level, we can then go over and have a look at what patterns form between those levels. So our B point, so this is our initial X to A up to B. So our B point, 618 to 786, so the back pattern, B point 0.5 to 618, so we know this is incorrect, so it's not a back pattern. At least 50 and doesn't touch 618, so ours does touch 618, ours exceeds 618, so it's not a back pattern. Butterfly touches at least 786 and doesn't touch 100%, so ours doesn't reach 786, it forms between the 618 and 786, remember? between 618 and 786. So it's not a butterfly pattern. Cipher, at least 382 and does not touch 618. So it's not ours again. Gartley, if it touches at least a 618 retracement and does not touch 786. So we've got the B point of a Gartley here. So it touches at least 618 and does not touch 786. Touches at least 618 and does not touch 786. So we now know that the only one out of all of the advanced patterns, Bat, Butterfly, Cipher and Gartley, out of the 4 advanced patterns we've got here, we've only now looking for the Gartley pattern, which I can tell you now the C point exceeds the A point, so we've got an invalid pattern here anyway, so I'm not going to go into that any further. But that's what you're going to start to look for. So you look for the M's and W formations, you then stretch your fib tool following the lines of the M's and W's. So again, if I draw this W on, there's our W. So you want to draw your fib tool following these lines. So here for the Gartley, our first fib tool was drawn from the first point of our first line to the second point of our first line. So that's where we're drawing our fib tool to and from. The next, we're going to draw our fib tool from following the next line of the W. Yeah, and now here we've got a retracement below 100%, or greater than 100%. So this invalidates the Gartley. Market form C if it touches 618 and does not exceed A. X to A, we obviously exceed the A point here. This is exceeded here. So our Gartley is now invalid. So we can stop looking. But that's what you're going to do. If you're doing this manually or visually, that's what you're going to have to do every single time. You're going to have to look for these M's and W's, draw the fib tool on for every single leg, go over to OT trades and make sure that every single leg matches up exactly to the rules in all of these patterns. Or firstly you've got to find which pattern you're looking at, make sure it meets the criteria of all of these patterns, and then plot them on the chart. So here we could plot I don't know if this is actually a pattern here or not, but we can, so we can plot these patterns on the chart like this. Once we know that they meet all of our criteria, you join the dots up and complete the pattern. Yeah. So again, once we join all the dots up, let's just show you an example using the software. Let's do that. So, do we have any bat patterns? Yeah. So here, this is a bat pattern. So this meets the criteria of the bat pattern. So we can do this. This is Euro USD 1 hour. Let's go over to Trading View actually. Remove. Whereabouts is here, isn't it? So Euro USD 1 hour. See that W formation? Yeah. We then join the dots up to form the bat. Now here, anything else? Crab pattern, shark pattern. Let's go for this current day shark. So this is live chart. Let's start from here. So that's our shark pattern drawn on MetaTrader, shark, and this is our shark pattern drawn on Trading View. Here, correlating. So on Trading View you would have had to go through and do this manually. With the software obviously prints it itself, it works all out for you. and we can test to see if these actually align. So let's get our fib tool. Okay. Make sure it's snapped to the swing high. Yep. The swing low. Yep. So here we've got our initial swing to the upside, which is these purple lines. Again, we've got 1, 2, and 3. So our first one, 1. So we draw our fib tool from the start to the finish of that swing, and then we're looking for a retracement. And ours falls between the 618 and 786. Remember, this is a sharp pattern. Over to here, harmonic sharp. B point falls between 382 and 786. So it's correct, as it forms between 382 here, this line, and the 786 here, this line. The next, we've got the C point, which is obviously an extension. So we draw it from okay, snap, yep. 1618. So this is our C point. It's just exceeded 1618 of the B up to A. 1618. 1.13 to 1618. Oh, sorry, that's an X to A. What am I doing? X to A. So 1.13. We can add that in. So anywhere between the 1.13 to 1618 is a valid C point of X up to A. The extension of this leg, so 113% of this move, all the way up to 161.8% of this move. If price falls with anywhere within this range, it's a valid C point. 1.13 to 1618. 1.13, 1618, and it falls just shy of the 1618, so it's still valid. Yeah, and then finally the D point is 0.886 of X to C. So X here to C here. So we're now ignoring this retracement in the middle, A to B. We're taking this entire move from X to C. We want to see an 886 retracement. So X to C, X up to C. Oh, I've done that backwards, sorry. And let's draw .886 D point. Here obviously says 886. Here's the price, and that obviously correlates with the 886 retracement level of X all the way up to C. Yeah, so that is the sharp pattern inputted live at the moment. So I hope that makes sense. Again, it's quite a long video, it's gone on for quite some time now, but I wanted to mainly focus on the fib tool, how to add it to the chart, how to use it, how it can be correlated to harmonic and advanced patterns, because that's what I trade. I didn't want to get into the makeup of all of these patterns. Again, you can go over to the website and learn all about that anyway. There's a video on each one breaking them down. That's pretty much everything covered. We can run through and have a look at them all. So the alternative chart has just got a 113 D point. The rest of the makeup of the pattern is the same. See, the D point is just falls slightly lower, so it's below the X point, whereas for the shark it's above the X point. The sharks and the butterflies I find work quite well. Don't know. Let's turn the sharks off. So this is now a butterfly pattern. Butterfly, butterfly, harmonic, and we can have the butterfly advanced patterns. Again, it's relatively easy, just we can turn them all on. Starts to look a bit of a mess, but there you go. So these are all of the different patterns. All the different patterns, all of the stop loss. So let's take this pattern for example. Stop loss levels, first profit target, second profit target, they're all put on. These are the conventional levels anyway, and you can go in and make your own up, change them. Your USD. So 1 hour custom pattern for the euro dollar. So we're on a euro dollar 1 hour chart, and you can see this is my actual live. So this is these are the patterns that I trade. Where's that one? So here you can see stop loss, profit target, and the pattern's completed and gone obviously to the profit targets. Here stop loss again, profit target, pattern's completed, it's gone to the profit target. Again here, so this pattern didn't complete, it's just projected into the future, it didn't complete. This one here, pattern's completed, stop loss is up here, pattern's completed on this bar, next bar, it's gone to profit target. Again, second profit target. This one here, stop loss. So everything's printed onto the chart for you. And again, these are all based on Fibonacci levels or percentage retracement levels rather than Fibonacci levels. But yeah, that's how you utilize that tool. So I'll leave it there, wrap things up. I hope that's helped clear a few things up. Any questions, drop me a message. Thank you again for watching. Bye.